there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I like to discuss a little bit of, more of a case of doing a review on the Bank of England, their interest rate decision, monetary statement, and the press conference which followed, and talk about how being brutally honest is a good thing, but it can scare the market. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, what has occurred? Those of you who were kind enough to join me with my watch-along a little while ago, you will have noticed we did a watch-along, obviously, of the interest rate decision. We know what the outcome was, but we don't know what the outcome was, the monetary statement or the financial or the press conference which followed. Now, as we all know, the Bank of England pulls the trigger and has actually increased interest rate by 50 basis points. It's actually the largest hike they have done since 1995, so 27 years ago. Interest rates in the UK now stands at 1.75%, which is the highest level since 2008, and that was the height of the credit crisis, or the beginning of the credit crisis. So yeah, they're trying slowly but surely. They're trying to catch up with those central banks. They got Bank of Canada 2.5, US 2.5, Australia 1.85. Now the UK's at 1.75. Forget the EU and the Bank of Japan. But like I said, they're trying to catch up with some of the major central banks. Now the vote. And remember, those who joined me, I was talking about the MPC, actually, spelling everything, MPC committee, the Monetary Committee. I don't know what the S stands for. My mistake, my error. But anyway, the vote was 8-1 on 50 basis points, and it was Tenero who voted for 25 basis points. But the main thing which has affected the market is what was said afterwards, after the interest rate decision. Now, the market had pretty much priced in there was going to be a 50 basis point rate hike. Okay, so that was priced in. But it's what was said. And basically, the Bank of England has been brutally honest about how they see things, which is actually quite refreshing. But my Lord, is it scary. Usually you get like the likes of, say, if you look at ECB, for example, Lagarde. I know I talk about her a lot in a negative light. I don't mean it in negative light. I just find her a little frustrated because I find her so vague in her answers. And when she's doing her press conferences, she's very poor at that. The Fed, Powell, has been extremely hawkish, and many of the Fed members have, despite the fact that the GDP in the US is negative 0.9%, they all deny, pretty much underplay the fear of recession. They underplay it, but not the Bank of England. Not the Bank of England. And I'll tell you exactly what they've said, and how honest they have actually been. Now, don't forget, we face very, very high inflation. Inflation currently is at 9.4, 9.1 in the US, 7.5 in Germany, 8%, France 6.1, Canada 8.1, Spain 10.8, and EU 8.9. So very, very high inflation. In fact, it's 40-year high. But what the Bank of England has actually said and come out to say, which is even scarier, is they forecast inflation to reach 13%. 13% by October. Their original estimate, or the original forecast, which is still scary, was 11%. But now they've forecasted inflation to reach as high as 13%. 13%. You don't get that sort of forecast from any of the other central banks. They say, they often say inflation, it has the risks of being elevated further, but they don't give you the brutal, honest truth of 13%. That is scary. And as well as that, instead of saying it could be a risk or underplaying the risk or economic slowdown or all that, they just come out and blatantly said, we predict a recession in the UK by the quarter four. Let's just come out and said it. come out and say, yeah, we expect a recession by Q4. And obviously, this is, like I say, talk about not beating around the bush, this calling it, saying it as it is. This is some of the other points they've also said, they said the labor market remains tight and domestic cost and price pressures are elevated. They also went on to say there is a risk that longer period of external generated price inflation would lead to more enduring domestic price and wage pressures. So again, underlying the fact they expect inflation to rise. This was a bit powerish. This was a bit like the Fed, but they did say delivering inflation to the 2% target an absolute priority. So that was more Powell. And he also went on to say policy is not preset path. So in other words, they're trying to get rid of forward guidance, like the Fed, like the ECB has done. And he also said a 50, and this obviously took the wind out of the sterling bulls as well for the time being. He also said a 50 basic point rate hike today does not mean that we are on a predetermined path to raise by another 50 basic points. So now market's thinking, okay, we've got inflation at 13% in October, recession by Q4, and likelihood of aggressive rate hike next time around is unlikely because it's not predetermined at all. So what's the outcome for the market? Well, as we saw during the watch along on the initial impact of the monetary statement and the announcement, the sterling came under pressure. Let's pull it up now, and it's still the case there. It's had a little bit of a buyback since then. Remember, before the announcement, we were challenging or eyeing that key level of 1.21976. After the announcement, sterling against the dollar, the cable collapsed and managed to drop all the way down to 1.2605 before having a slight recovery. It's currently trading now just above the 121 level, currently trading at 121.15. I think the key level now, and like I said, I do think this is potentially preset, maybe further in the future. I can't give you a timeline. Obviously, I do think this has put more momentum for the sterling bulls, and I do think we could see at some stage further pressure on the sterling, and I can see a potential key level for the cable currently at 1.20034. So I'm expecting possibly in the medium or immediate term more pressure to come on the sterling at some point. So like I say, let's have a quick look at the euro sterling as well, because that skyrocketed on the back of that announcement. And as we can see, at the same time, look at this. This is before the announcement happened. It was trading round about 183.57 on the back of the Bank of England base rate decision and the monetary statement and the press conference. It skyrocketed, actually hit around the high level of 0.84295. Like I say, it's had a bit of a sell-off at the moment, and it's currently trading at 0.8415. The guppy was pretty much the same. Sterling came under a lot of pressure against the Japanese yen, and it still remains slightly under pressure, currently trading at 161.55. So like I said, I mean, the fact that the Bank of England was so brutally honest, and like I say, I know it's a refreshing change, because the Fed, we're always trying to dissect whenever they do a statement or a press conference, we try and dissect their words to see what they're trying to tell us or what they're trying to mean. And like I said, when the ECB does it, we just want her to be open with us, like to tell us, not sort of take us down a path which takes us nowhere. But like I say, for them to come out and literally just be open and say recession in the UK by Q4 and inflation to be at 13% by October is, like I say, scary, but at least it's honest for a change. At least they've actually, like I say, they've told us directly how they see things. Right, and other stuff, and then we'll have a quick look at other things happening in the market. Initial jobless claims was announced today, slightly higher than anticipated at 26K versus 259K expected. Those of you who have watched me on a regular basis, they know I cover the initial claims. The English very much say how it is. I wonder where you're from. Yeah, they sometimes they do. Like I was saying, yeah. So the initial claims 260 versus 259 as expected. Okay. And like I said, those who watch me on my program, they know I talk a lot about the US initial claims. I know it's a weekly event. I know it's a medium event, but I always say I think it's an early warning indicator of the state of the economy. Now, currently, as it stands, there is a steady increase. Like I said, I call it a canary under the coal mine. If we go back just to 1, 2, 3, 4, 5, 6, 6 last initial claims: 231, 235, 244, 261, 254, now 260. So again, a steady increase in initial claims. So this has got to be telling us something. And the other thing, which again I don't talk about a lot, but this came out, and I think, again, this is tends to be a low priority, but I think this needs to start being watched as well. And that is US continuing jobless claims. This is the amount of people who are still signing on after the initial claims per week. Okay. And again, all right, it came in higher than expected at 1.416 million versus 1.37 million expected. And again, if we go back from the last 6, 133, 132, 133, 138, 136, 1416 now. So again, we're seeing a steady increase in continuous jobless claims as well. So, you know what I mean? I think this is potentially going to become, like I said at the beginning of the week, the very first video I did on Monday, I discussed about the labor market and the ongoing debate about, if the US is in a recession or not. Those who believe we're in a recession, technical recession, because negative 0.9, and there's the other parts who say, no, we're not in a recession. The labor market is still so strong. And I'm just thinking, as soon as we can start seeing the labor market start to waver, and I'm seeing an increase in initial and continuous, then their argument might not be able to hold water much longer. However, we'll find that out tomorrow, because tomorrow we're going to do another watch along of the NFP and US unemployment tomorrow. Expectation is for it to come around 250,000 new jobs created, slightly lower than the number previous of 374. But anyway, this, I think, like I say, could cause a little bit of excitement in the market, because, like I say, the labor market, in my opinion, is key. A, for the argument about recession, but B, if it continues to be strong, then it gives a green light to the Fed to carry on being more aggressive in the future as well. So I will be doing a watch along NFP, USP, and US unemployment tomorrow at 12:20 p.m. UTC. On that note, let's have a quick look on what else is going on in the market. Let's start off with the euro. Okay, here's the euro at the moment. Okay, slightly sideways today. Obviously, the tension has all been on the sterling today. Currently trading at 1.00194. This is on a 30-minute chart. Seeing a potential resistance at the 200-day moving average, 1.02065. So quite range bound at the moment with the euro. The dollar yen. Okay, like I say, it was doing better yesterday on the back of, like I say, the tension from the Taiwan issue had died down a bit, and the market started again re-looking at the fact that obviously interest rates is 2.5 in the US, but in Japan is -10. But like I say, it's finding a little bit of buying support. It's slightly lower than the beginning of the session. We've seen a little bit of buying potentially around an area of interest at 133.36. What else should we look at? Let's have a quick look at gold, obviously. I know, I'm sorry, everybody. I do like talking about gold. Gold is still maintaining its bullish momentum as it stands at the moment, currently trading at $1,785 an ounce. Still got that key area in focus, which it tried to touch today, of $1,791.79. So as it currently stands, gold is still, got the bulls behind it. The NFP will potentially have an impact on gold tomorrow. So we need to see what that number is, because this could potentially have an impact on gold as well. If we have a quick look at oil, because oil, I'm pleased to say, because obviously we all drive cars and it makes a difference for us, is currently under pressure. Don't forget, this morning I spoke about the EIA announcing there was 4.5 million extra barrels in storage. as opposed to 600,000 barrels, which analysts had expected. So bigger storage, which has given the market the impression that maybe there's demand is beginning to weaken from the biggest consumer of oil, which is obviously the US. So that's what it's putting pressure on the oil. Currently hovering around a level now at $89.54, and it's trying to break through that level as it stands. So yeah, oil is under pressure, which is a good thing for us, because let's face it, we want our petrol prices to come down, don't we? So yeah, so that'll be interesting to keep an eye on. The markets, S&P 500 pretty much unchanged from yesterday. This is on a daily. The tech as well, pretty much unchanged, hovering around the levels it closed at yesterday, 13,232 points. So that's where we are with the market as it currently stands. So like I say, the main events, of course, still to come, is US non-farm payroll tomorrow and US unemployment. Don't forget, I think the labor market is going to become really interesting and something the market will have to focus upon. And that's why we're doing a tixee Live watch along tomorrow at 12:20 p.m. UTC. Please come and join me, and hopefully it will be a really exciting event. The markets as they currently stand. Okay, the FTSE currently trading slightly higher, 0.14%. DAX currently trading slightly higher, 0.86%. Euro Stoxx 50 currently trading at 0.65%. Right, and don't forget, you can ask me questions anytime you wish. Or just maybe share an opinion or say hello or anything like that. You can. What do you think about the Bank of England being brutally honest for a change? Do you think they were right to do that? Or put the market in a sort of position like that? Or do you think they should have been maybe a little bit more coy? What do you think about that? And do you think, what do you think about oil prices? Do you think, obviously the OPEC decision yesterday affected it for a little while, but really is now a demand story, not a supply story. So let me know what about oil. Or ask me a question about any other currency pair, maybe a currency pair you trade, for example, what I think about that. If I have an opinion, obviously I will share it with you. Anything like that. Anything like that. Okie dokie. Okie dokie. Don't forget, if you think of a question later, put it down in the comments on either Facebook and YouTube. I will see them and I will reply to them next time I'm on air. So do remember that option as well. So anyway, don't forget, I'm back online again tomorrow at 8 a.m. UTC to do the 11 o'clock. We'll do the morning, the European session. Then back on again at 12:20 p.m. UTC to do the watch along of the non-farm payroll. And finally, we'll be back on again tomorrow, round about 2 p.m. UTC to discuss the US session and the fallout from the NFP, if there is any. So don't forget, hopefully you can come and join me for any of those. It'd be nice to see you. Definitely. Anyway, if there is no questions, don't forget if you're watching me on Facebook and you enjoyed it, give us a follow if you like. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like, or hit the notification button so you know next time I'm going live. If you enjoyed this video and found it interesting and useful, and you've put up with me, my over-the-top enthusiasm for the markets, which I just simply cannot help because I love the markets, give me one of those. It's always nice to know that you like what I do. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.